Hey everybody, Ryan with Rental Real Estate back for another exciting week of the rental real estate market update. Today is Friday, May 3rd, and this week we have 5 stories for you. But before we jump into those, just want to remind everybody to subscribe to our monthly newsletter if you're not already. It's only once a month. We cover all the top 10 stories across all the different rental real estate asset classes, cover mortgage rates, exciting products, all the good stuff that you need to know if you're into rental real estate. So if you're not subscribed to it already, please consider doing so. And we'll jump into the stories. All right, so jumping in the first story, we have this one right here, which is Yardi is becoming WeWork's biggest majority owner. Everybody probably already knows who WeWork is, but Yardi is the biggest. I guess they're like a technology company overall, but their main product is a property management software. And it's been discovered that they're going to be the majority owner now. They're providing a lot of capital, I think, to cover the outstanding debt for WeWork. So I thought that was really interesting to see kind of what can maybe come out of this. You know, putting a technology company together with WeWork. Definitely going to be some synergies there, and it'll be interesting to see kind of how this plays out after. So moving on to the next story. So this one it's taking a look at Wayfair. Yeah, everybody's probably familiar with that as well. It's a very popular online furniture. I guess you can call it like a online furniture discount retailer store. I bought furniture on there. I really like them. But this story is on basically them kind of moving into the brick and mortar space. So now they have like a showroom where you can actually check out some of the products online. So I thought that was pretty cool related to rental real estate, to where you have like a predominantly online business that's now also blending some brick and mortar, in person, real world components to their business. Moving on to the next story, we got. So this one is Route 21. Maybe I'm out of touch with this, I'm not sure, but I guess they're a really popular mall staple. It says they have over 540 stores, but they basically are going to be going out of business. They're closing 540 stores. Something interesting that I saw in this, I think I read it in a different article about it, but basically it mentioned that their downfall. I got the quote over here. It says, "Is growing irrelevance of the brand to teenage customers." So I think the interesting kind of takeaway from this is that you got to stay relevant. Especially if you have a retail business, you have to be relevant to your customers, and you got people wanting to go in there, kind of like the Zara's and all these kind of popular stores that everybody likes to go to now. If you don't kind of stay with the times, it can get difficult. It says they got about 200 million in debt, 4,900 employees. So we'll see if they can emerge from this bankruptcy or they're gone for good. So moving on to the next story. This one here, so this one was a really interesting one to me because it's a huge building in downtown LA. If you've ever been there or are from there, basically this building, I think the debt on it was like over 300, almost 320 million. And the big news story first was that it sold for almost half the debt here at 145. So first everybody was like, wow, this place is selling for half of its debt, or half of what's due on it. And news just came out that the buyer is now going to pull out. I'm not quite sure if they noted the reason why. Yeah, it says right here it's unclear why they pulled out, but nevertheless they're pulling out. So we'll have to keep an eye on this and kind of see where it's going to go. But this kind of signals to me kind of that the office market is still not out of the clear yet, even though things are trading at a significant discount. We're still kind of in the middle of we're just going to see how low these valuations go. So, interesting story there. Next story, this one is related to the vacation rental market. So this one is Expedia stock tumbled as VRBO or Verbo, however you pronounce it. Weakness leads to basically lower their stock price, or their guidance or their projected stock price. And read some of the takeaways here. You can see why, but basically it's related. So everybody's probably familiar with Expedia. They're the big travel site, but they also own Verbo, which is one of basically the competitor to Airbnb. And one takeaway that I got from this, it's saying that they basically were expecting a boost in profits when they were going to migrate the Verbo platform with their Expedia platform, but I guess things didn't work out as well as they kind of planned, so it took a hit to the stock price. Not sure if the vacation rental market's softening or whatever's going on there, but that was one of the big things that I kind of took away from it is maybe the vacation rental market softening. Also, sometimes making these migrations of like a brand like that, and trying to change things that are already established might be a little harder than anticipated. All right, so as promised, we'll take a look at the comments from last week and see if there's anything there we can answer for anybody. So we got nothing, but hey, that's all good. We're still gonna leave it open for anybody if anybody's got any comments or anything related to rental real estate like that, or just hey, I like the video, I don't like the video. It's all good. We'll be live, transparent about it, and we'll hopefully get some comments in here next week. We can answer them, and that's it for this video. So we'll see you next week. Thank you.